Today at market open, the S&P 500 index hit down 20%, almost 21% from all-time highs. This is the third time in 5 years the S&P 500 has been in a bear market, and that's the first time historically that's ever happened. So a lot of big things going on out there with tariffs and fear overall within our current economy and a possible recession ahead and all of those things. But I want to talk about a few things. What I did today, I bought 3 stocks today, where that money came from, kind of what my plan is moving forward, whether we see a bounce in the next few days or if this continues to take a downturn and we keep going further and further into the negative. I'm also going to go over my 5-year price prediction on Adobe stock. So, cool video ahead. Let's get into it. Welcome to the channel, guys. My name is Trey. This is Investing by Numbers. We talk about stock market, stocks, all that kind of stuff. If you're into that, please subscribe. Also, like the video if you get some helpful information out of this video. It really helps out small channels like us. It would mean so much to me. Anyway, all right, today, the S&P 500, we're looking at SPY here. We are sitting, we did hit 52-week lows today. It got all the way down when we first opened this morning. We opened right around, here we are. We opened right under $490 a share. And right now, the all-time high for SPY is about 613. Which we hit, a few months ago. So right around $490.50 was the 20% down, which puts us officially in a bear market under that 20%. But we rebounded as the day went on, and actually we, after hours here, we are green on the day for SPY. So I was waiting on this. Last night, we did hit. We were in the 480s last night, and I had money in my Robinhood account ready to go. So how did I approach this? Here's how I kind of do things. Every week I put 25% of my pre-taxed income from any paycheck I get into stocks. I do that if I get a check from any of the jobs I do, real estate, or I work installing window treatments. So any of those paychecks I get, 25% pre-taxed goes into my Robinhood account in stocks. So with a bear market, all right, historically these crashes, a bear market, only happen about once every 8 to 10 years or so. So the fact that we've seen 3 bear markets, at least for SPY at this point in time, in the last just over 5 years is pretty incredible. So waiting on this to happen, I told myself going into it, I will keep investing my 25% pre-taxed income, but anything over my emergency fund that I have in my bank account, the amount of money that I could, I could spend for 3 months and pay all my bills without a paycheck coming in, whatever it is. Whatever is over that amount, if the S&P was under that 20% mark, I put whatever's extra into stocks. So today I put about $4,500 into 3 different stocks. So I'm going to go over both of those 3. I've talked about these 3 stocks before. I was pretty excited to start putting extra money in. Right now, of course, we're not at that 20% level, but we'll see what happens over the next couple of weeks. Obviously, if we kind of go up, but then next week we dip back down, I'll do the same thing. If we're under that 20% mark from all-time highs, I will put whatever's extra in my bank account after my emergency fund into stocks. And that's how I do it in a bear market, because I want to be investing more money when we're in a bear market. Now, even if we see more decline over the next 6 to 12 months, I'm okay with what I bought today. We can't time the market. All right. And I've got an idea here that this could be a shorter bear market than a lot of people expect. A lot of people are thinking we're going to go into a recession. But the different thing here is with this specific crash, it's pretty much all about tariffs. You could say that, partly to do with inflation, but we kind of already went through that in 2022. The 2022 market crash was inflation. It was Russia, Ukraine. And those were like two big points that were really causing that market crash that we went through and that bear market that we went through. Obviously in the early 2020 with the COVID crash, that was a really fast crash. We hit lows and back to all-time highs just within a couple months or 3 or 4 months, whatever it was. It was fast. So with this situation, all right, Trump is in complete control of this market crash, and he knows it. So the crazy thing with this going into it is if Trump decided to cancel all tariffs, then I completely believe within a month we would be regain all of the losses that we've accrued over the last couple of weeks. So I really think that this has a higher probability of being a faster crash and recovery than we would see in a normal market crash, bear market situation. That's just my opinion. We'll see how it plays out. The only thing I know for sure is there's a lot of good deals out there. There are so many great stocks selling for cheap. I told y'all in my stocks I'm buying for April which stocks I was focusing on because we thought that this was going to end up the month where we go into a bear market was a big possibility. Obviously, we're right there at it. I know the Nasdaq's in a bear market. Obviously, right now the S&P 500 is flirting with the bear market back and forth today, and we have yet to see the Dow Jones Industrial go to a bear market territory. But we'll see what happens over the next few weeks. Let's get into which stocks I bought today. The first stock I bought today was Nvidia. Obviously, y'all know if you follow this channel, I'm big on Nvidia right now. I think it's a fantastic company. It blows my mind that more people aren't jumping on the Nvidia train right now. Super cheap price on the stock, and they've had phenomenal growth. They've got really high net margins, so I don't really expect net margins to grow that much more over the coming years. However, Nvidia still has plenty of double-digit year-over-year growth ahead of it. It's been a beast. So I bought, let's see down here. Right now I'm holding 104 shares. My cost average is just over 115 a share. And today I bought 17 shares, just over $88 a share. So just under $1,500 worth. So pretty good. I mean, obviously I bought at 88 and by the end of the day, we're sitting at a $10 per share jump there just in one day. Now we'll see what happens from here. I'm not holding my breath on that. We could definitely dip down tomorrow and see lower lows with Nvidia. But I'm a buyer of Nvidia, definitely up to $100, $125 a share, if not $135 a share. I mean, in my opinion, anything under a 50 PE on Nvidia is a good buy, and that would be all the way up to almost $150 a share right now with Nvidia. Now, I don't know if I would really be buying at that level only because right now there are so many good deals going on. So if Nvidia was to shoot up that high, most likely there'd be other stocks I would start focusing on at that point. But I still think Nvidia is a good buy under $149 a share. But right now, being under $100 is amazing. I was waiting on an opportunity to buy Nvidia, and here we are, and I'm excited about it. I've got now I do have other shares of Nvidia as well in my Schwab account, but right now 104 shares here. And I've also got another position in my Schwab account, which averages around $120 a share, something like that. So the second stock I bought today was E.L.F Beauty. Another stock that was on my list for this month. Super great price on E.L.F. Another fantastic growth stock going on out there. Their revenue growth year over year has been phenomenal. And right now, I've got roughly around $8,500 in E.L.F right now. My cost average is almost $62 a share. I also hold more E.L.F in my Schwab account. But today, I picked up, 30 shares at $50.58. So great price on E.L.F. Happy to get it. Now, the third stock I got into was Adobe, and I want to go over Adobe's 5-year price target that or estimate that I've got for Adobe. Fantastic company. They trade, you know, roughly usually above a 40 PE, and they're pretty easy to get over a 50 PE. They trade in a sense pretty rich. Now their revenue growth is usually around 10% year over year, but super stable company. They are subscription based, and so I think that's probably why it trades so a little bit rich for that 10% growth. But it's because when they get users, you know, it's subscription based. So when they get a new user, usually they keep that new user. So I've got right around over $7,000 worth of Adobe, and my cost average is around $385 a share. Today I bought, let's see, 4.65 shares at $337 a share. So happy to get Adobe. I'm really liking Adobe right now. And let's go over this outlook, price outlook on Adobe, because I've got videos on Nvidia, my 5-year prediction, and E.L.F. I'll link those at the end of this video. So let's get into Adobe and let's look at the numbers. Let's see what we can expect over the next 5 years from Adobe, and we'll see what we might be looking at price wise in 5 years based on where it's traded PE wise over the last, you know, decade or so. Okay, I'm on macrotrends.net, and a couple things I want to look at before we get into it is I like to look at net margins when I'm doing a price outlook, and I also like to look at where the PE ratio historically is traded with that stock over the last 10 to 15 years. So if we scroll down here, here's our PE ratio. I'm just going to zoom in from 2016 on. Obviously back here, we traded, for a while there, we were definitely keeping above a 40 all the way up to a 64, 66. As of lately, we dipped down in 2023 to around 32 PE, went up to around a 53, and right now we are in the low 20s. So the lowest it's been PE-wise in well over a decade. So fantastic price here, and we have pretty consistent revenue growth year over year. Obviously, we've been right around that 10 to 15% for a while. Analysts expect this thing. We'll look at this in a second too. Analysts are expecting on average just under 10% for the next 2 years year-over-year growth as far as revenue growth goes. So let's check out their net margin here. I like to get a good idea of what I might expect the net margin to be at in 5 years. So down here, we see that back in 2020, we had a net margin of all the way up above 40%. We dipped down, and right now we are around almost a 31%. So let's just say in 5 years, we get a little more improvement there with our net margin, and let's say we're trading at or it's at a 33% net margin. That's a pretty safe net margin. A little bit of growth, but we're not at the all-time high net margin we saw in 2020. So let's just say 33% there. Now, another thing I want to look at is our analysts. I'm on Yahoo Finance, and I like to do on Yahoo Finance, they give us a couple years of revenue estimates. So I usually go with the average estimate just to play it safe. Obviously, at the end of 2025, we're expecting 23.5 billion, and then at the end of 2026, they're expecting 25.8 billion, a little over. So from where revenue currently was for 2024, this is about a 9.3% year-over-year growth, and this is about a 9.9% year-over-year growth. So let's check this out. This is where I've right now our current price on Adobe is $341.50. All right, so right here, 2025, I have that 23.5 billion that analysts expect with the 9.3% year-over-year growth, and then the 2026 was 25.82 billion, and that was around a 9.9% year-over-year growth from 2025. So let's say in 2027 we see a 9% growth, and then in 28 we see another 9% growth. And then in 2029, we have 8% year-over-year revenue growth. And we have a net margin in 2029 of 33%. That would give us 10.93 billion in net income. Divide that by shares outstanding, and we get an earnings per share of $25.65, or right around there. But that's a good even number. We're going to go with that. So we looked at the PE range for Adobe, and we've seen a lot over 40, even all the way up to the mid to high 60s. So let's say in 5 years, a stable range for Adobe is between a 30 and a 50 PE. Let's say it kind of comes down a little bit, and instead of going from like a 40 to a 60, let's just say we're trading around a 30 to a 50. You know, obviously 30 on the lower side, and then when things get a little overvalued, we might get all the way up to a 50. So a 30 PE for Adobe would give us a share price of $769 per share, which is over a double up from where we're at right now, obviously. A 40 PE would give us $1,026 per share, and a 50 PE would be almost $1,300 a share, $1,282 a share. So pretty fantastic numbers there. Obviously at the 50 PE, we're looking at almost, you know, a quadruple, about 350%, somewhere around there, almost 400% increase on our current share price, which we are sitting under $350 a share, $341. So some really fantastic numbers here on Adobe. When I do these outlooks, I kind of go for just like a base case. I don't really give, you know, we could arrange this to do a bear case, and we could do a bull case. But these numbers here are just kind of, you know, an average of what I expect. They might do better, they might do worse. But we get a little bit of, you know, of course we get more wiggle room here with our PE ratios. And that's kind of like where I like to really give some wiggle room there. But obviously, what I really like to see when I'm looking at a 5-year outlook is I'd love to see over on the low side. I want to see over a double up in 5 years. I really would like to have, you know, at least 30% year over year growth. But if I can get a double up after 5 years, I'll take it. So obviously $769 a share based on the current price of Adobe, that's over a double up. And even I think at my my cost average basis on Adobe, that'd be somewhere right around a double up for me to 30 PE. But, you know, as investors, we're not looking to sell when it's undervalued or fair valued. We want to sell these stocks when they're overvalued. So to me, this between 40 and 50 PE would really be what I'd be looking for price wise. And if I was looking to, you know, trim some of my position up in a few years, you know, or sell it for profit and move it on into something that was undervalued. But anyways, Adobe's looking fantastic. Great company. They've got a great balance sheet. I've gone over them in the past on my stocks I'm buying. So I won't get too in depth with Adobe's numbers for now. But I think, you know, this price outlook, this estimate here for 5 years is a great one. I think Adobe, you know, they're solid. They maintain that revenue growth. They're really consistent, and I think that's why they continue to trade usually over a 40 PE because people just tend to count on them, and they perform. So that's it for me, guys. Just kind of a quick recap here with all the excitement going on in the market right now. You know, if you're an investor, this is a great time to be buying, and I think if we were going to be in a bear market, for me, this could be one of the best situations in that, you know, right now, the market's in the president's hands. What he decides to do with that, whether he decides to keep doubling down and we get in a trade war. If he does hold on to his guns, I do think we will see more downside. But Trump, you never know what he's going to do. Love him or hate him, you just don't. And you have no idea what his plans are. But no matter what happens, you know, I'm going to keep buying good stocks at good prices. These prices we're seeing right now are phenomenal. So if they get even lower, I'll be buying more. And if we do stay in a bear market, hopefully I'll have some nice commission checks from real estate coming in the next couple months soon, so I can be putting more money. So for me personally, the money I put in today, I was starting to put back money to get a new car. This year was kind of my plan. I was really hoping I'd be able to pay for a car in cash. Obviously, I didn't have a ton put back. I had around 4,500 or so. We've had a rough month at our house the past month. Obviously, we owed on taxes, so I threw about $3,500 into paying our income tax. We spent about $2,000 getting some repair work done on the outside of our house on some columns and such. And I just paid $1,600 today on having to get a new radiator in my car that I have now. So I wish I could have spent that $1,600 on something new. But I'm going to try to hold on to. I've got a Jeep right now that I'm trying to really squeeze out every bit of life I can. I'm not the kind of guy that loves to get new cars. Once I've got a paid for car, as long as it still looks okay and it drives well, I don't like spending money on vehicles. I'd much rather be buying stocks, Obviously, being a real estate agent, I need to have a vehicle that looks decent, and so customers and clients aren't looking at me driving an old hoopty or something. But I've been hoping that my vehicle would last throughout the year, so I could at least hopefully put back some money and buy a new car in cash. But we'll see. As long as the markets, we stay in a bear market, all that extra money is going to go straight into stocks for me. That's how I do it. I want to be investing more money when there's a bear market, because that's when the money's made. That is when the money's made. In 2022, when we were going through that bear market, I was putting more and more money in during that bear market than I do normally, as far as how much money of my paychecks I put in and stuff like that. So that's it. Stick with, don't let these, the news scare you. This is just a great time to buy. We've seen these bear markets, for decades, and we always make it out of them. And if you can hold yourself to the fire for a little while and be picking up stocks, you will do extremely well over the next, 5 to 10 years holding the stocks you buy during this time period. Lots of great deals out there. So good luck, with whatever you're deciding to buy. Yeah, if you have something that you're looking to buy or have been buying, comment below. Tell me what it is, and I'll look into it as well. Maybe it's something I might be interested in. But right now, for me, E.L.F, Adobe, and Nvidia are the three I'm focusing on. I do really like SoFi. I think SoFi is going to do really well over the next coming years, but I'm just not much of an investor in the banking sector. Obviously, they're fintech, but also loans and banking, and especially if things get a little catawampus over the next few months to a year, who knows what the banking sector will do. However, I think SoFi is a strong company. I think anyone that investing in SoFi will do really well over the next few years, but I'm not sure if I'm going to put any money into it or not. I really like the three I'm talking about. Those are the ones that I'm loving. So we'll see. We'll see what happens from there. But anyways, I wish you the best of luck in whatever stocks you're buying right now. Like I said, comment below. Tell me what you're buying. I'd love to hear about it. But we'll catch you on the next video. Thank you for tuning in. Have a great night.